you've also invested in you mentioned diapers.com, Quidsy, which ran a couple different websites. It seems to me that e-commerce is such a crowded space, and it's very difficult to kind of differentiate yourself online. What are the qualities that you look for in a good e-commerce investment?
So for the most part, in North America, I'm scared out of my mind to make any e-commerce investments because I've learned to have enormous respect for the giant, which is Amazon. And also, and a little bit of this is 20/20 hindsight, but looking back, most of the great consumer companies, Quidsy is a nice exception, are based in Silicon Valley, and I live in New York. And so one of the things I've observed is that if we as investors happen to come upon a trend or have an insight that isn't widely shared by other people, we have a great opportunity to invest and do really well as investors. And so as we talked about earlier, with user-generated content, companies like Yelp and LinkedIn, in 2005 and 2006 when we made those investments, most people weren't that focused on the consumer web, certainly not user-generated content. In 2007, I think when we invested in Quidsy initially, you couldn't find many other venture capitalists who wanted to touch e-commerce. And so today, it's become a very popular category, e-commerce, and it's much harder to make investments that are great investments because, in fact, it's so crowded. But also, the really large incumbents like Amazon in the e-commerce situation, or in the e-commerce instance, they're quite sophisticated and have realized all the ways in which they can use their massive scale to essentially best any startup experience. And in fact, to some extent, we sort of fought with them at Quidsy, and then they ultimately bought the company. And fighting a company with $100 billion market capitalization is not a fun thing to do. And
right.
I think it's going to be treacherous for a lot of the startups who are trying to do it today.
So no e-commerce investments coming up, it seems like.
It's certainly not an area that I'm looking at significantly or all that seriously. Now that said, people tend to innovate in very surprising ways, and so one of the areas that I know we won't be doing in North America is an e-commerce business that sells products made by third parties. That's essentially Amazon's domain.
Sure.
Because if you're sourcing the product from a third party, so is Amazon, and you're just going to fight with each other on how cheap you can deliver it to customers and how fast you can get it there. And I just don't see how you can possibly beat Amazon at that game. Yeah. There may be other e-commerce opportunities that are different. Perhaps e-commerce companies that make their own stuff.
Right. So more vertically integrated e-commerce. Yeah.
If you make your own stuff, there's no way Amazon can deliver it at a cheaper price because they can't even get it. The problem is, it's one thing to innovate in e-commerce with third-party products. You're fundamentally a tech company in that instance. Most of what you're doing is marketing online and delivering an online experience. And then there's this entire logistics infrastructure that you also have to build. But if you take that one step further and are actually a vertically integrated e-commerce business, now you have to be expert in physical product design, merchandising, like all these other characteristics that are not all that commonly found in tech startups. And so while it's possible to sort of skirt around Amazon's strengths by doing some of these things, actually being able to build really great competencies in every one of these areas is incredibly difficult. And so it'd have to be a truly standout, absolutely stellar team with the perfect mix of experiences for me to have the courage to invest, but it's possible.